Hello, everyone. I'm Larry Mellon, Vertex Director of Tax, a part of our Chief Tax Office. We welcome you to our pilot episode of our new series, Larry Live, Tax Talk for Tax Professionals. On each episode, we will discuss tax topics that tax professionals should be aware of and included in their ongoing tax strategies, and to share the latest trends in the tax landscape. On today's episode, we are joined by JT Knowlton, Director, Strategic Partnerships, who leads our e-commerce team. JT will be sharing with us how recent e-commerce and digital marketplaces trends are becoming more important to finance teams, as we will discuss the sales and use tax impacts. Welcome, JT.
Hey, Larry. Great to be on here today. Thank you for having me. This is fun.
Sure.
Yes, we can talk about tax long and wide. There have been a lot of changes, and it's good to be here.
Great. Thanks for joining us. So let's get started with our first question. How has e-commerce evolved in the last few years on a global scale?
Well, for our focus, compliance, right? It's not just about indirect taxes anymore. It's about compliance from where a customer might be sitting, where a new business unit might be launched, right? Governments always seem to take more, right? They never seem to want less. They seem to want more every year. Their restrictions keep growing. And with online purchases increasing over the last few years and a lot of focus and shift to e-commerce, we've got things like remote work, VAT, B2C commerce, cross-border commerce, compliant invoicing. Just essentially, how does the merchant stay compliant in the ever-changing world of e-commerce today?
Yeah, I think that's important. Just as you explain on those things, there's many aspects of that. When people think of e-commerce, often there's a lot of tax groups out there that do not know how that even impacts them, and to what part of their sales, their journey, what they're doing with their business, and how e-commerce affects it. Specifically, I think there's even more opportunities where they have e-commerce and they're unaware of that. So that's great points that you brought that up. And we can certainly add more to that as we go through some of these other questions too. So what e-commerce and digital marketplaces trends can we also discuss here?
There's a lot of things going on with marketplaces across e-commerce. Mostly the customers that we see, they want to save time and money calculating those indirect VAT or compliance generating taxes. They want to see automation, and simply because it's a no-sum, zero-sum game. If they're hiring somebody to do this, Larry, eventually there's going to be mistakes. They've got to pay staff. There's a lot of time involved in this, what we call a non-revenue generating activity, right? It's a statutory requirement for all companies. If you get it wrong, you can go out of business. But on the management side, from a financial perspective, once you find a good automation partner, companies, they can scale other parts of their business. They can grow efficiently because they're not worried about this. So I think there's a lot of different topics we could talk about with marketplaces and such. I think people, one of the reasons they want to be automated is long-term. They want to avoid audits, and they want to not deal with compliance, right? They want to streamline processes, and especially in the e-commerce world, because it's all about scalability, right? So if your tax isn't scalable, your company's not going to be.
Yeah, I think a part to add to that is, as we look at this automation, it's for especially the tax person that's potentially listening to this, the biggest thing they come up with is, where do I find time for this? Where's the bandwidth of people to be able to do this? That anyone can sit and say how automation is going to help them. It's having the backbone of the group to support that, to be able to have the financial impact to move ahead with that any type of e-commerce area, as well as anything digitally. So as you had mentioned, companies are getting audited through this. They're looking at it and recognizing that there's more time that they have to have staff on audits, because there is the potential for errors that they're doing manually because they don't have a process in place, or a framework to be able to look at those things. So as they go through these audits, they certainly will find that this automation will enhance their ability to report this stuff, timely getting information, and with that, it's going to also reduce the audit risk that they have. As these companies start to work with their chief financial officers or financial leaders to reporting back, putting these automation things into place is only going to help them in the long run to be able to get this information, reported to them.
To your point, Larry, one of the advantages of having automation to begin with is when an audit does come, it's all prepped.
Yeah.
Everything's at your fingertips. You're not going to have the auditor come and spend weeks clearing through paper or digital files. So audit prep is another advantage.
Yeah, and with that, we always kind of talk. I always bring up in a lot of these sessions that I go through, just because I've been through so many audits, I always kind of bring up the reverse audit piece of it. How often do businesses have the opportunity to do reverse audit on themselves to find these exposures? I think that there are many tax professional leaders out there that recognize that they may have exposures, but they have no way to review or validate if they physically have those exposures. And some of these e-commerce, digital, all these areas that could help them with a solution to make this better for them are out there. And it's just getting that bandwidth to do that. We know that there's certainly some differences too in businesses that are out there that are established, and they're looking for ways to now improve it, versus potentially a startup. And I'm sure there's probably couple key things you might be able to share on the differences on what someone's going through in e-commerce space for somebody who's new versus potentially somebody that's already been an established business.
Sure. If an established business hasn't looked at automation, I would say one pathway that they can pursue in outsourcing the work, it's that they're going to be outsourcing not only the risk, but all the non-revenue generating functions, able to shore up and actually redeploy staff working on tax to profitable activities like collection or sales. With an app, with a good tax automation app, with the size of the company, obviously most very large companies have already looked into this. Smaller companies, one of the advantages of having automation is that you're not going to lose your business 5 or 6 years in because you've been doing it wrong. I have run into several customers over the years who didn't handle tax, had $17-20 million businesses going, and had to shut down because they never dealt with the tax.
Right. So a piece of that too is I always talk that a tax department professional, manager, whatever level, has to deal with, making that tax decision. How are they mapping these products? Are they someone who doesn't have automation in place and they're manually looking and saying, this is how we're going to tax something based on something? But with these automated features, there's so more information available. And I'll talk just specifically first on the sales tax side. Most of these businesses know how they're taxing the products and services they've been provided for an existing business. They know what they've been doing. Have they been audited? How are they handling that? Hopefully, they've been handling that well, but they can certainly secure that better by having an automated system in place. But by looking at these tax mappings, you can look to make sure you're clear on how you're doing these things and having an accurate mapping of all of the products and services you provide on the sales tax side. But it's just as relevant on the purchase side. We find that there's many people that have more audit risk on the purchase side because they don't specifically know everything that they're buying to run a business in the tax department. They know what they're selling, but when they start looking at these things that they're buying, they often have higher exposures. So by using some of these e-commerce and some of these other areas to improve this stuff with automation, they can establish different things that can help reduce those risks for audits. And we said, with all those mappings, some of these jurisdictions are used to working with tax engines too, so they have this stuff that makes it easier for them. So, I'm sure. Do you have anything else that you wanted to share with us about some of these automations? Any other additional comments?
I'd say that the move to cross-border is something that a lot of merchants are concerned about, and it's extremely important. You want to make sure when you choose a provider, when you choose one, that regardless of where you're going to set down your new business footprint or manufacture something or distribute it, you have a provider that can handle that boots on the ground. Like Larry, you brought up some great examples of potential customers that might have a very small window of where they sell. And so they have, they know when the tax department's making changes, but you multiply that across dozens of states, and then you go into Canada and some stuff into Europe, you have a totally separate can of worms. So for those doing cross-border sales, they're coming out of North America, coming in, or going to other countries outside of North America. The complexity is it's unscalable for a business that wants to grow to handle this manually.
Yeah, and especially we see a lot that when talking with customers and stuff on the Wayfair decision, back in 2018, they're basically talking about how, these changes for people that are just having to cross over to a state, not even outside the country, and the issues they have with that. So I think a lot of that has played into it too, where these business potentially that were smaller or were only in one location, where had to put processes and steps in place to be able to handle these multiple registrations, multiple compliances in these various states and counties and local jurisdictions. So there's a lot that's on there, and automation plays a key into that. Specifically because there are tools that are out there that will help you decide, do you have these risks and exposures that are out there? So there are a lot of stuff on there, and there are different ways to look at it. So I think that, for now, I think we kind of covered a lot of the information that we wanted to cover today. We know that JT and I, we can certainly sit down and expand on this a little bit more for further stuff as we start drilling down. But I think just for this series and this episode we put out today, I think that kind of shared enough with our viewers to kind of look at that and see where we're going with this stuff. And I would be more than happy to have you back again, where we could certainly dig into this a little bit more, talk a little bit more in depth about this, and especially as we start seeing these tax changes continue to grow for our customers. So I appreciate you joining us. Yeah.
Thanks, Larry. Keep your eye on Europe. They've got some crazy stuff coming. Appreciate the time today.
We will. Great. Let's thank you. And I thank everyone for joining as well. We hope to see you for future episodes that we have. And thank you and have a great day.